Okay, so today we're getting into a kind of a new area, again, building on what we did from chapter 2, and that is we're using something called a multi-column journal to record transactions. Okay, this would be like we're talking in very simplistic terms here because we're talking essentially about a manual paper accounting system here, mainly to learn the theory about behind what's going on, where ordinarily we would use something like QuickBooks if we're like a small business, which is an electronic accounting software program, or some larger proprietary that has a banking module and an accounts payable module, an accounts receivable module, and a sales module, and all these various things, facets that would be batching transactions. Think about you going to Walmart to buy a $50 pair of tennis shoes. Do they record a journal entry every time a customer walks in to buy something? No. They batch, maybe they get to the end of the day or somewhere, all those transactions are being batched, hundreds of them, into a journal entry essentially for that day, if you like. Maybe sales would encapsulate 500 sales for that day. I'm just making those numbers up, but whatever. So our objectives here is to first of all define what the journal is, and then what are these things called source documents. And again, we're going to identify the 4 parts of a journal entry, how that works, and kind of go through those steps. Okay. Now, for starters, just understand we will continue to work with the accounting equation, assets on the left, liabilities and owner's equity on the right. We're talking sole proprietorship here, web design business, which is very simplified. That's the first thing to understand. We'll continue to talk debits on the left, credits on the right. Okay. And we're going to use the 4-step method of analyzing transactions. Which accounts are affected? How is each account classified? I'm looking over my shoulder here at those 4 things right there that my finger is pointing at. How has each classification changed? How has each amount entered into the accounts? So we're going to continue to use that model. All right. I want you to start out with, if you're watching this independently, I want you to go to chapter 3 in journalizing transactions. Now, I went a little bit fast there. I am currently in, if this is the fall of 2021, I am currently in week 9. And I'm looking for lesson 3.1, recording transactions and the multi-column journal. And there it is. All right. And I want you to take the time to go through and read. I'm going to go past journalizing here. Wait a second. I'm going to go back really quick here. Okay. I got that. All right. Using a journal, double entry accounting. We'll talk about that. I want you to read the section here about source documents. So get a little bit familiar with what it's talking about. Like, what in the heck is a source document? So read this page. And then other source documents, I want you to read that page. And let's just stick with those 2 pages there. Other source documents and source documents. Read those 2 pages, please. Take a few minutes to do that. Pause the video first, please, and then read those 2 pages. Okay, we come back. And like I said, this is a very bare bones business, and talked about how transactions might be handled. Understand, too, that when we talk about these source documents you just read about, these are not only important, not only for businesses, but also for individuals. So, for example, I have a health savings account, which gives me tax benefits on my tax return. But every year, I have to be prepared for the Internal Revenue Service to come in and say, hey, can you prove that number? I have to have source documents for all of my medical bills, my records. So if I pay a dental bill, I need for Becky down at Dr. Pearson's office to give me a copy of that bill. If I go in somewhere else and have some sort of medical work done, I need maybe a bill from the clinic. I need to be prepared to defend the number that I have on my tax return in case someone were to check that. Same is true with a business. If somebody were to question the expenses for some account and understand that a business can be audited for taxes just like an individual can, I need to be ready with some sort of a record that shows, hey, this actually happened. Now, last chapter, chapter 2, we had the guy with the pool business, right? And forensic accounting. Well, what did he have for source documents? Did he have any source documents, or was he just willy-nilly putting stuff on a spreadsheet? What was the proof that he actually did the work? All right. Now I'm going to do a quick aside here. There were 18 NBA players who were indicted and arrested yesterday because of fraudulent medical work done that never happened. What did those source documents look like? And how fraudulent and fake were they? So source documents are very important, not only for businesses, but also for individuals. So when we talk about journalizing, we're talking about some sort of a form that we use to record transactions. It's called a journal. Now here we're using a very simplistic, like I said, journal. And that process of recording those transactions is called journalizing. We put stuff in a journal. It's called journalizing. Here is our multi-column journal. This is the good old accounting paper. This takes me back. Again, we're learning things on paper in theory. If you had a business in actuality, you'd probably be using something like QuickBooks, which would use an electronic version of a journal very similar to this. Very similar. You'd be surprised. We have special amount columns for cash, in this case, credit, sales, I should say, sales and cash, for those items that we're going to be using a lot of. We don't want to have to write in the account title over here every time for sales and cash. And maybe there's some other things maybe we use a lot of, we would have another special column for. I should point this out. We have the date here. The account title is for everything we put debits and credits in the general columns. Supplies, prepaid insurance, communications expense. Every time we use one of these general columns, we would write the account title in here. And then when we impact sales or cash, we would enter that over off to the right. All of our transactions would occur here. All right, that's kind of a warm up to the multi-column journal. It's very important, and the multi-column journal helps you with accuracy. How accurate are your records? Again, accounting is not like a close is good enough science. It's got to be right on, because your business records need to be like perfect. Chronological order, it's in date order. You start with the earliest transaction and move on. Now, that's not to say that you get down your multi-column journal and you forgot a transaction from 4 days ago. Well, you still date that with the original date. So it may be actually a little bit out of chronological order, but at least you have it accurate in that it's in there and recorded. Double entry accounting, which means for every debit entry, we have a corresponding credit entry. And after we enter something in a multi-column journal, our debits, everything on the left side, must equal our credits, everything on the right side. Information for each transaction recorded in a journal is called an entry. So if, for example, I debit some general account and put in the account title, that is one entry. Another entry would be the credit part of that, a sales entry or a reduction to cash or something like that. The record of debit and credit parts of a transaction is called double entry accounting, which means for every debit entry we make a corresponding credit entry. There's always going to be at least 2 entries with any transaction in our accounting system. Debits must always equal credits. After a transaction is made, assets must equal liabilities plus owner's equity. Those are hard and fast accounting rules every time. And if you ever get off, that's probably one of the reasons why. Your debits didn't equal your credits. Your A does not equal your L plus E. We just read about source documents. Again, some business paper which shows proof of a transaction is called a source document. Now, these source documents, again, we're very simplistic. A lot of these now would be electronic. You generate a sales record electronically. You have some sort of a check in your system, or maybe a debit card transaction, could be a sales slip or whatever. So here's an example of a check. You have the check over here with your who you wrote it to and the amount, and then you've got the check stub. And most businesses, if they were doing it manually, would have some sort of a check stub, which would be a record of the check, because the check goes out, right? And it's not coming back, correct? So anyway, there you go with that for a check, okay? And moving forward here, we've got, oh, and by the way, a lot of businesses have carbon copies of checks, right? So you'd have a record in your checkbook of that carbon copy. If not, you would have the check stub over here. And anymore now as well, banks will they'll leave you with copies of your check in your banking system. You can click on a link and it'll bring you a copy of your check. But you want to record the check as it's issued. And here is an invoice. So we build somebody for website design services, for example. We have the company name, we have their address, the terms over here. They're going to pay us in 30 days. We have the month and day, we have the invoice number, and we have the amount. This would be enough information to record an entry for a sale, an invoice. Sales invoice is used as a source document to record a sales transaction, and it's often referred to as a sales ticket or a sales slip. And again, in reality, these might be batched in a larger system. Here's a receipt. Somebody paid us, in this case, we received money from Michael Delgado as an investment in the business. So Michael Delgado essentially wrote himself a receipt because he took his private funds and invested it in the business. Now, if a customer paid us on account, for example, that would be another form of a receipt. Receive money. And whenever you receive cash or money from a customer, you're going to write them a receipt or print them out a receipt if it's going through an electronic type sales system, which most businesses would have. Or maybe if you have a swipe system and you're swiping in credit cards, you'd print out a receipt to your customer and would maintain a copy of that in your system. Memorandum is one that's kind of confusing. Like, do we even do memorandums anymore? See, I bought supplies on account from Canyon Office Sales, and I wrote myself a memorandum. This is kind of old school. Anymore, we would probably have a sales receipt from Canyon Office Supplies for purchasing that item from them. That would probably be more common of a source document than a memorandum. But the bottom line is we're using something, a paper, electronic record of some sort, to back up as history and proof that the transaction actually happened, as what goes into the multi-column journal. Calculator tapes, I just have, I have it right here. I went and used the school credit card yesterday, and here's my Walmart receipt that I taped to a piece of paper. This is a source document for a charge for the FBLA bonfire. I bought a whole bunch of s'mores stuff and candy and whatever, and I need to deliver this to our accounts payable person today so she can record the fact that I used the school Walmart card to buy this stuff. Otherwise, somebody just uses the school Walmart card willy-nilly and doesn't have any source document. They have no idea who bought what from Walmart. So to keep track of things, every time that Walmart card is used, I've got to have a receipt. When I give the card back to the district office, they're going to say, "You got your receipt? Here it is." And I put okay to pay, sign my name, and put the date. That's very important. So calculator tapes, or in this case, sales receipts, are very important as well. So a journal entry, the multi-column journal itself is a book of original entry. It's where it starts. It's where our transaction begins in that multi-column journal. It's a permanent record. We use ink, not pencil, because obviously pencil we can erase and somebody could go back and change something. And later on, we'll talk about independence and checks and balances and things like that. But the sole proprietor should put stuff down in ink. And if you're like, what happens if I make a mistake? Well, you actually have to cross out stuff and write above it or around it. And if we have even dollars, like $15 without any cents on the end, we put 00 on the end in our multi-column journal to make sure we have that full amount recorded in our system. So here we have received cash from owner as an investment. $2,000, receipt number 1. Cash is debited. Michael Delgado capital is credited. This is going back to chapter 2. Here's what our multi-column journal looks like. Write the date in the date column, January 2nd, whatever the date, January 2nd. Write the debit amount in the cash debit column over here. Cash was debited. There's our special account for cash. Record the credit amount in the general column, credit column, and write the account title. Well, it's going to Michael Delgado Capital. So we would write the account title in here, and we would credit the general area. Again, every time we put an entry in these general columns, we must write the account title in here to designate what entry we're making in those general columns, generic if you like. Write the source document number, in this case, receipt number 1, in the document number. Now, we'll do post-reference later. I think it's in a later chapter. We're not going to worry about that right now. Okay? All righty. Sweet. I'm going to take a pause here. So again, we enter the document number, source number R1 for receipt number 1 there in our document number. I paused the video for about 45 minutes, so I'm back. All right. Continuing on, there's our source document. So here's a transaction, paid cash for supplies. $165, check number 1. By the way, don't start numbering your checks with check number 1. Ask your bank to start them with check 2,000 or 10,000. If you start issuing check number 1, people look at your check numbers like, oh, you just started your business. It's like you're advertising the fact you just started. Maybe pretend like you've been in business for a couple of years with your check numbers. Just saying. All right. Supplies, 165. Debit, of course. Cash, 165. Credit. So once again, all we're impacting here are assets. Increase and decrease. No impact to the right side of the accounting equation. Assets equals liabilities plus owner's equity. Here's our general journal, our multi-column journal, I should say. Write the date in the column down here. Now it should say Jan over here. That's a typo. It should say Jan 2. We put supplies in because it's the account that we're putting in the general columns, debit or credit. Every time we enter something in the debit or credit columns, we have to put in the account title over here. Fill that in. If it's sales or cash, that we have a column, a special column already over here on the right for that. We are debiting supplies. We are crediting cash. Debits equal credits. Assets, in this case, one increases, the other decreases. Credit. Write the source number document in the document number column. Source document, check number 1. We put in C1 for check 1. In what order are transactions recorded in a journal? Well, in a perfect world, they're recorded by date. Fancy word, chronological. Why are source documents important? You verify the accuracy of a specific journal entry, but really they're also important, again, as a record in case you get audited on your, let's say, your income taxes, which is very possible. All right, just keep that in mind. 4 parts of a journal entry. We have the date, we have the debit side, we have the credit side, and there's some sort of source document, something that proves that that transaction actually happened. Okay. Let's get started. Let's pop over into MindTap here. MindTap. Here we go. And I'm again in week 9 here. I'm going to go down to working papers. And by the way, the application problem here is going to be very similar to the working papers. Working papers, and I'm going to do the work together. All right. We have a multi-column journal here. And here's our transactions. And here is our chart of accounts. By the way, can we like highlight here? No, we can't. Sorry. All right. K-SPA. All right. So we have, I'm going to pin this and kind of move it off here to the left or down or something up here. I guess that's not going to work too well. All right. Anyway, let's see here. Date. We have our transaction, receive cash from owner as an investment. Well, our date is going to be April 1. April 1. Account title is going to be Norma Dirks Capital. Norma Dirks Capital. Document number is going to be R1. We'll worry about post-reference later. And we're again receiving cash. So we've got $2,800. And I just messed up with this pinning here. Sorry about that. $2,800 we are debiting to cash. And we are crediting Norma Dirks Capital for $2,800. We're increasing equity. We're increasing an asset. Okay. All right. Then I would say April, and I hope it doesn't mark people absent for doing April period 2. Right, Adam? Paid cash for supplies. Well, my chart of accounts, I've got supplies. And that's going to be check 1 or C1. I'm going to be increasing supplies for 415.00. Make sure you put the 0 on the end. And I'm crediting cash for 4.1500. So we just journalized, using that term vocabulary, journalizing. We just journalized 2 transactions. All right. And now I'm going to close out of this. Now you are going to go to the working papers and finish the on your own piece of that, which is going to be fairly brief. The application problem, which is journalizing 3 problems, very similarly, very brief. And your terms review, which is 2 pages, terms review. And again, you can go back and look at the textbook and go and review that. All right. There we go. And let me know if you have any questions. Take care.